Hello guys, welcome to our YouTube channel Stocks for Everyone. Kross Ltd had their Q1 FY26 con call on August 12th, and there were few interesting things that I thought I want to mention in this video. So we'll discuss about the few highlights of their con call, and also let us see how it looks, right? And if you know, Kross is a company that manufactures like trailer axles and suspension components and other components for generally commercial vehicles and tractors, etc. So this is not a fundamental analysis, this is about the highlights of their conference call. So once you watch this video, if you want a detailed video on fundamental analysis of this company, then please let me know in the comment section. So if you look at what are the topics for today's discussion, then we'll look at the financial performance that they highlighted in the con call, and also about their capacity expansion, new product development, export growth, future outlook, and shareholding pattern update. Okay, and also guys, disclaimer, this video is only for educational purpose. We don't intend to give you any buy or sell recommendation. Please check with your financial advisor before taking any investment decisions. And also I want to let you know that in one of our YouTube video, someone a viewer had commented saying that our content was good. Thank you so much. But he also highlighted that our presentation can be improvised so that video can be more engaging, and even we felt that it makes sense. So in this video you can see that the presentation we have improved on presentation part. Please let us know if this is good or it can be improvised more. So with that, let's get started. So first factor is the financial performance. So if you look at the overview of it, then revenue for Q1 FY26 stood at 139.4 crores, which was down 4.8% year on year, largely reflecting softer demand in the commercial vehicle segment. And if you look at the EBITDA came in at 16.2 crores, which was 2.5% year on year decline, though margins improved by 27 bps to 11.6%, indicating operational efficiency gains. And if you look at their PAT was 10.7 crores, up almost 40% year on year, with PAT margin rising from 5.2% to 7.7%, supported by higher gross margins. So their revenue was down, EBITDA was down, but their PAT was higher. Okay, so this was related to their financial performance. And if you look at their capacity expansion, then forging capacity doubled with the commissioning of 2000 ton and 1000 ton screw presses. Installation of 1600 ton press is scheduled for H2 FY26. Machinery for a new extrusion line has been delivered, with commercial production expected in Q3 FY26. This is anticipated to enhance axle output capacity from 5000 to 7500 units per month. So they're saying that their capacity would be almost 50% increased for with respect to axle output. So that would be good sign if they can do that, and all these will come down to what is the demand, what's the sale. So just increasing capacity won't be good, and whenever people are spending more on capex, they anticipate that more and more orders or demand is going to come for that particular segment, right? So, and if you look at the other point, around 80% of IPO proceeds have been deployed in strategic projects, with the remaining 20% expected to be utilized within FY26. So if you know, then this company is recently listed around 1 year back, and they have spent 80% of IPO amount what they got into the ongoing projects, and 20% will be utilized by end of this fiscal year. So this is with respect to their capex plans. Now, if we look at their new product development, then company is set to commence tipping jack manufacturing by October 2025, with revenue potential of 80 crores by FY27. New products such as car carrier axles and suspension were introduced in Q1 FY26. Landing gear sales are expected to begin next quarter. And over 10 new fabricator customers were added in the trailer segment, and offerings were expanded to a domestic OEM in agriculture. And if you look at their export growth, so exports currently contribute around 4% of revenue. New orders were secured from a tier 1 European OEM, so they are not saying which firm it is, along with expansion in South America. The company has set a target of 5% export revenue in FY26 with expectation of double digit export growth in FY27. So they're having some ambitions for export. Then limited exposure to the US market has helped avoid direct impact from recent tariffs. So if people are worried about what's the impact of tariff from US market, then this is the thing. And if you look at the future outlook and what are the risks, so this is the main thing, right? Whenever you're looking at a company, you cannot look at a company and put it to your watch list or to your portfolio just because of the past performance, right? So future outlook, what they're quoting is something that will also give you some confidence. So if you look at their management guidance, management has indicated revenue growth guidance of 10 to 12% for FY26 with expectations of stronger performance in the second half supported by infrastructure related CV demand. So they're giving 10 to 12% for FY26. That's the revenue guidance, and this company is almost trading around 23 P. So industry P is around 27. But again, it would have been good if it was around 15 or 16%. But let's see, because before IPO or during the time of IPO, this management had informed that they were growing at 35 to 40% growth for last 3 or 4 years, and they would expect same thing. But in this 2025 year, I did not see same growth. I think it was almost flat. So now again they're saying 10 to 12%. So it's something that we need to watch out for. Construction of the seamless tube facility is ongoing with commercial production planned for Q4 FY27, projected to generate approximately 600 crores over the following 2 to 3 years. Okay, and working capital pressure from increased receivables, particularly in the trailer segment, impacted FY25 cash flows with improvements anticipated from Q3 FY26. So they're saying that their cash flow would be improved from Q3 FY26. And key challenges remain in the form of cyclical slowdown, regulatory changes in the CV sector. So let's track and see if they can overcome these concerns, and also if they can meet their guidance, right? And if you look at the shareholding pattern, so I wanted to give you this update. So this is not from con call, but I found it interesting. So if you look at the promoter shareholding has increased over last 4 quarters. That is since their listing. They're from last 1 year in the market, and their holding has increased from 67.7% to 68.23%. So they have increased in every quarter, the promoters. And if you look at FII and DII, the FII and DII shareholding has decreased from these last 4 quarters. And if you look at the current position, FII's holding is 2.53%, DII is 8.87%, promoter at 68.23%, which is healthy, and public at 20.36%. So for a small cap company, DIS and FIIs having almost close to 10% or 11% is something good, but they were previously even more than this. So this was for today's video, guys. As I said, this is not fundamental analysis. This is just the highlights of Quadron FY26 like investor presentation or con call. So if you want to have the video on fundamental analysis of this company, then please let me know. And if you like the presentation, then please let us know in the comment section about the same. If you find this video useful, then please hit that like button and also share it with your friends and subscribe for more good content. And this would boost our confidence to make more and more such YouTube videos, because this video took some time to create this presentation, gather information from their con call, read that entire con call, and then summarize, right? So it would be really helpful if you can support to this video. Thank you guys. See you guys in the next one.